Are you retired and quietly worried about what kind of economy your kids and grandkids will inherit? You're not alone. Because while the headlines scream about tariffs on China and tensions with Mexico, something far more dangerous is happening behind the scenes, and it could reshape the financial legacy you worked a lifetime to build. Let me tell you about Greg Thompson. He's a 72-year-old retired engineer from Scottsdale, Arizona. Last year, after hearing about new tariff talks with China, he rolled over $678,000 from his IRA into a gold IRA. At first, it sounded extreme. Even his financial advisor raised an eyebrow. But now, he sleeps better than ever. Why? Because the headlines haven't gotten any better. And the real story most Americans are missing? Tariffs aren't just taxes on foreign goods. They're taxes on us, on consumers, on families, and yes, on retirees trying to help their grandkids get ahead in a turbulent world. Let's break it down. In March, President Trump announced a new round of proposed tariffs on key Chinese exports, from electronics to auto parts. Mexico responded by warning of countermeasures that could raise prices at the grocery store: corn, avocados, beef. Meanwhile, inflation is still lurking in the background. The Fed might pause hikes, but prices aren't dropping. Have you noticed? That $100 grocery run from 5 years ago is now pushing $160. And Social Security sure isn't keeping up. So how does this connect to your retirement? Or more importantly, your children's future? Because the moment Washington plays tariff chess, Wall Street plays panic poker. Market volatility shoots up, the dollar gets shaky, and suddenly your diversified portfolio, it starts looking a little too exposed. Greg saw this happening last year. He watched his 401k take a hit. But what really pushed him over the edge? His daughter was trying to buy a home for her growing family, and interest rates, combined with rising material costs from, you guessed it, tariffs, made it nearly impossible. That's when Greg made the move. He transferred $678,000 into a gold IRA, not to get rich, but to protect the money that was already his, to create a hedge, a shield, something real, tangible, not just numbers on a screen. Here's the truth most advisors won't say: gold doesn't promise double-digit returns. But in times of uncertainty, it offers something even more valuable: stability. Especially when politicians and global powers play games with our economy. Now, if you're listening and thinking, I've got enough saved, I'll be fine, I get it. But this isn't just about you. It's about what you pass down, what legacy you leave. Because the wealth you built over 30 or 40 years, it could vanish in a market swing driven by foreign policy, not financial fundamentals. This isn't fear-mongering, this is math. So what can you do? Start by educating yourself. Learn how a gold IRA works. See if it fits into your plan. You don't have to go all in. Greg didn't. But that $678,000 rollover? It gave him peace of mind. And his daughter just closed on that house, thanks to a little help from Dad, and a nest egg that didn't disappear with the Dow. If you're retired or close, and you're wondering how to protect your wealth and your family's future, now's the time to act. Because tariffs may come and go, politicians may change, but real assets, real protection, that's up to you.